the increase in wealth is not going as rapidly as we would hope. I mean, we need to be growing at around 7% per year in order to double per capita incomes in one generation, and we're not doing that. Certainly not in the emerging markets where 90% of the world's population lives. But this book is really highlighting the schism between long-term economic challenges such as demographics, technology, and the jobless underclass, the risks of income inequality, the debt burden, and productivity declines that are all long-term, intergenerational, and structural problems in the economy. But obviously, given that liberal democracies are very focused on the short term, we have elections so regularly in the United States every 2 years, every 4 years for the presidency. We have this mismatch, which means we are not solving a lot of these long-term economic problems that I worry will upend the global economy.
Like corporate managers that report every quarter have to do things to make their quarterly numbers. It's the same thing. Every 2 years, these guys, they get elected, they have to start working on their next election. I wonder if you could distill it down to the kind of things that we need, because the challenges are daunting. Technology brings automation, which displaces workers and wipes out huge swaths of people that have jobs right now. We have to worry about that, and we have to match the skill set of the jobs that are going to be available with the way we're training people. That's all part of this. But philosophically, do we want more market-oriented policies, or do we want more government insertion into the private sector?
So, look, I'll show my hand. I'm a big supporter of liberal democracy and a big supporter of market capitalism, but I think it's too simple to make those statements without acknowledging that there are limitations. Our liberal democracies have very low participation rates, so clearly we're far away from the one man, one vote mantra that democracy or defines democracy. But also money has seeped into the political process. In terms of economics, we've talked about income inequality. Social mobility has deteriorated over the last 3 generations, and some estimates, it's gone down by half. I mean, this is corrosive to the economy, and ultimately issues, I mean, we focus on tactical issues like inflation. Is the 10-year going to break 3%? Those are the things that we focus on. But longer term, we have a real issue about human progress. And I believe that we need to get public policymakers to focus in on those problems.
Mm-hmm. Is it just that we can't see long term because you have all these changes that have come through? How do you do that? How do you focus on problems that are not going to be there when these elected leaders?
Well, I think there are a number of ways. I talk about them in the book. So, for example, we could extend terms. Some countries have longer terms. For example, in Mexico, they've got
we have people here who are arguing for term limits so that you're out faster.
I also argue for term limits. I think you can extend terms and cap terms. So in Mexico, it's 1 term for the presidency, but it's 6 years, 9 years for senators. You don't want to have a situation like Dingell or Byrd in U.S. representatives who actually stayed for 59 years. I mean, that's also not acceptable. But I do think we can extend terms. The other thing that I propose is that we should increase the pay of politicians. I think that if we do that, but force them to justify their compensation through linking it to GDP outcomes or life expectancy outcomes or even income inequality outcomes. They're doing this in Singapore. Ministers that get paid 30 to 40% bonuses based on those outcomes, and also with the threat of clawbacks if they don't perform. I think that we would have a much more innovative and much more engaged political class.
We're going to get GDP numbers today.
Yes, that's
and
right.
Most of the economists will tell you that this first read on first quarter GDP, you should add something like 0.9% to it, because for years we've been facing a problem where these numbers aren't reflective. There's seasonal transitions that are not reflected in this.
Yes.
So if I could see setting up some metric that we're going to be measuring politicians by, but we got to fix the metrics first.
Oh yeah, well, absolutely. And for every economist who's going to sit here and say we should increase, point X to that number for seasonality, there'll be other economists to say, well, actually, there are societal costs that we are not being reflected. And I think a lot of the environmentalists and people who are very much focused on ecological costs will say, well, those are not really being fully reflected. We should actually deduct from the GDP estimate. So I think that we definitely, as economists, the GDP numbers are from the 1940s and 50s. I mean, Kuznets was, put these numbers in a while ago, even before that. And so we do need to upgrade the metrics that we're looking at.
I know you don't want to get simplistic, Dambisa, and I understand that. But I still would like to know, I think we had an 8-year period, talking about the last administration, where I think the policies were not pro-growth. As a result, the economy stayed below 2%. As a result, the Fed was stuck at 0. That caused asset values to get marked up for the people that own assets, and income equality got worse. So the best laid plan of redistribution and trying to physically move money from the haves to the have-nots actually resulted in leaving the have-nots worse off. So now here we are, and we may have the third straight quarter of 3% growth because we've got some of these growth policies. So can a strong economy and capitalism in the private sector, if you get rid of regulations and make it easier to work, can't that at least help a little?
Well, look, the bad news is that we've tried both of the suggestions that you're making.
Yeah. We need something in between?
We do. We've tried supply side, keep the interest rates.
All we got.
The taxes low. And we know that's now, it hasn't worked to stem income inequality. We've also tried the tax and redistribution. That has also not worked. So what we're looking for here is long-term interventions. And you know what the Congressional Budget Office forecasts are for debts and deficits in this country. I mean, we are concerned.
But we can
about
be
this.
so concerned and do so much that we don't have, the debt on the entitlements causes the whole economy to grow slower, and it ends up hurting the people.
Well, I would say I would leave you with one thought, which is that ultimately I think this is about intergenerational value being added. And so I think capital allocation decisions should be towards education. The education metrics in this country and globally are horrendous. And unfortunately, because we are focused on the short term, we aren't really looking at these long-term opportunities for growth.
You can't do apples to apples between the U.S. and Europe, but the entitlement state economic model of Europe has produced much lower growth long term than
That's
here.
absolutely right.
So I don't know. I don't know what and certainly take it to the conclusion of Venezuela or true socialism, and it's just horrific.
But we're seeing Hungary, Poland, Italy, a number of countries. The Brexit vote itself. It's not just about immigration. It's also about concerns about long-term growth.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.